Hey, good morning, everybody. Welcome to the middle of the week on Wednesday, September 18th. Glad you were able to join us today. And again, as before Dave gets on, if you like what we're doing, please like our page at Statler Financial Services here on Facebook and like this post and share it with your friends and family. Hey, as we get ready, we're really winding down earnings season. Not much left to talk about, but there's a couple things reporting today that we'll talk about. There's some economic numbers that are supposed to come out about 8:30. Hopefully, we'll have those in time to talk to Dave about those. And really, as we wind down earnings season, we are excited again to offer our free report on retirement strategies. Folks, listen, if you are 10 years out from retirement, 5 years out from retirement, or you are already retired, this report is a must-have. All you have to do is go to statlerfinancial.net/LM-3. It'll be in this post right above this video. Hey, Dave will be with us in just a moment. Hold tight.
5.7 Light FM. That be Sean Mendes there. It's 8:40 now. Let's check in and find out what Wall Street's doing to your money today, because heaven knows they're always doing something, and sometimes they're up to no good, it seems. Actually, not too bad to start the day out anyway. Let's check downtown and see what's going on in the offices of Statler Financial Services. Phillip Statler's on the line. Phillip, good morning. How you doing?
Good morning, Dave. Hey, doing well today, halfway through the week. The markets were a little, soft yesterday. They're off to a soft start this morning. But we do have some economic news coming out that I think is pretty good. I mean, we got housing starts just blowing it out of the water last month, up 12%. 100,000, more than 100,000 better than expected when it comes to housing starts. A great start to the day.
Yeah, those two housing numbers we got at 8:30 just absolutely threw me for a loop. Housing starts up 12% during August, and building permits were up 8% in August, which was another big surprise.
It is, and that's the best numbers we've seen in a month since we have to go back to 2007, before the financial crisis, to find a number that good, which leads me to this.
Oh boy.
What brought on the last issue was mortgages, but that was tied to real estate. I got to think that, we're talking about real estate having great months again. Is it going to be the next shoe to drop that causes us to head into that recession? And nobody knows, but man, this bull market's been running for a long time now.
And that is one of the things. I mean, I kid you about sometimes getting into what Zig Ziglar used to call stinking thinking, but at the same time, any time a curve goes straight up, that's almost the definition of a bubble. And I mean, it is possible to overheat a market. I mean, this is undeniable good news, because we've been looking at slowdowns in housing markets now and using that as an indicator that the economy was slowing down a little bit. Well, okay, the last month or so, we're getting pleasant surprises, and the August starts and building permits was, that borders on the overheating, doesn't it?
Well, it does, and I will tell you, though, looking at the futures, those numbers aren't helping the futures any. So I got to think maybe the traders are maybe thinking the same thing. I did see a Duke University study. They do this every year, maybe even every quarter, but a majority of the CFOs, as chief financial officers in the U.S., they surveyed 225 of them. And now a majority of those believe that we will be in a recession within a year.
And like we've been saying all along, it's more art than science, but it's interesting. And when you get an outlier like the housing numbers today, I got one of two things, the reactions on the futures. I'm thinking one of two things is happening. Either they're waiting for the Federal Reserve decision this afternoon, or a whole lot of traders' bull crud detectors are going off on these housing numbers.
Well, that's true. And let me just go back to that same study that was done by Duke University. And one of the quotes I found quite interesting, because it came from the chairman of FedEx. And we'll talk about how FedEx kind of missed their numbers in a minute. But The quote goes like this. It says, our performance continues to be negatively impacted by a weakening global macroeconomy environment driven by increasing trade tensions and policy uncertainty. And I think that's probably the whole Fortune 500 is probably looking at that type of thing.
Absolutely. We've seen them responding conservatively, managing conservatively, and making conservative numbers on this earnings season just passed. We always say this when something looks really weird and out of the line. We keep referring to the term data point all the time. The housing starts and the building permits last month. Yeah, really good news, but data point and the overall picture that we're getting is that we may or may not hit a recession anytime in the next year or so, but there's no doubt whatsoever that while we continue to grow, the growth is slowing down by a bit, and that's not necessarily bad news.
No, absolutely not. And another thing that's brought out in this article I read was that, they're still hiring. Corporations are still hiring. I think tomorrow when we get the jobs, unemployment numbers, I think they'll still probably look pretty good. So, from that standpoint, as long as we're still hiring, that's good news.
Absolutely. The other thing affecting our money today, and I mentioned this as passing as part of why the futures are really responding enthusiastically, is the fact that at 2 p.m. this afternoon, we get word as to whether or not the Federal Reserve is going to lower interest rates again, and whether or not they're going to plan on doing it again and again over the next few months. And it looks like there's starting to become some doubt as to whether or not they're going to commit to a program of reducing interest rates, doesn't it?
It does, and I read a headline that says, Paulson, he's going to get criticized no matter what he does today, what comes out today. There's going to be those people that say we shouldn't be lowering interest rates. There's people that say we should. And there's going to be those people who say we should today, and they did. And then looking forward, there's not enough information to give us a perspective on what they're thinking. But if you look across the pond to Europe, I mean, we already know what they're doing. And so that continues to weigh, I think, on our Fed. But how much, you talk about this a lot, how much can they do and still keep some ammunition in their pocket?
Yeah, I mean, we're sitting here with an economy that, we can, discuss until the cows come home whether or not we're heading for a recession. But the fact of the matter is we know we're not yet. And at some point in time when we do, they're going to need some interest rate headroom to be able to drop it, which is kind of why I'm sitting on the fence of saying I'd be happy to see them not drop the interest rates this month and just give us the language in the statement that's saying, look, we're watching like a hawk and we're ready to move when it's time. I don't think that would help the market any, but that would strike me as good economics.
That'd be good for Dave, but not necessarily good for the markets, huh?
My point, yeah, I think the market's hooked on heroin, and they're expecting those low interest rates to continue. So smart economics doesn't necessarily equate to smart investing sometimes, does it?
No, you're absolutely right. It doesn't. The economy can go one way, and the markets can go the opposite way.
Understood. Hey, we had a few earnings reports that kind of paint an interesting picture. The one that I saw last night that came out after the market closed, Federal Express, they've been having kind of a shooting war with Amazon and have agreed to a kind of sort of divorce, and that's going to take a chunk out of their pocket, and it kind of messed with their quarterly report, didn't it?
Yeah, it really did. They did not have a good quarter. They missed by 10 cents a share. Revenue missed estimates as well, and FedEx then also went the one step further. The third strike you're out deal. They cut the full year forecast. And of course, they're blaming that on higher cost, lower revenue from Amazon deliveries, and then the overall slowing global economy that I mentioned in that quote in that report. And so they are. I got to imagine they're probably on your big losers list today, down 10.5% this morning before the market opens up.
Yeah, we were talking about a music chart. They're number one with a bullet right now. Give me some good news, would you?
There's good news, but then there's good news, right? And so we had General Mills come out. They beat by 2 cents a share. Revenue came in a little short of what was forecasted, however. And they did see some improvement in their North American retail sales and their pet unit. So they've got some good things happening, but not necessarily their stock price. They're
Yeah, what happened?
down. They're down 2.25% this morning.
That's a little bit better than the delayed quote that I've got. Maybe there's a recovery in process. I was
Maybe.
showing about 3.5.
So then I got Adobe. You know, the PDF manufacturer. They're the, I guess, the go-to company for that type of stuff. They
Yep.
beat by 8 cents a share. Uh, they revenue was just slightly above what Wall Street had forecasted. They did, however, give lower than expected current quarter revenue forecast, which is hurting them. They're hurt by one of their marketing software units, and so they're trading down almost 3% this morning.
Adobe's Flash Player is officially dying on all three of the major web browsers right now, and that's been one of their major payload sources for downloads. And I've got a sneaking hunch that's probably not going to help them as they terminate that software toward the end of the year.
I'm sure. And then the last one I have is Chewy, the pet company that does a lot of mail order stuff. They lost 10 cents a share, which sounds bad, but that's 1 cent better than what was expected. Their revenue was modestly above what was expected, and their current quarter forecast exceeded what the analysts expected. So we would think that we would see green ink, right?
Mm-hmm.
Not so much. A matter of fact, they're down towards their low of the 52 weeks. They're down 1.1% this morning before the market opens up, and they're like less than $1 away from their 52-week low.
I want them to do well. They're the only people that sell the cat food that my cat will eat, so they got to stay happy or my cat's going to starve.
And then you're going to be in trouble, right?
Oh, yes, nothing worse than a mad cat. One more before we go to the markets for the day.
That's all I had. I know you had Seagate. It did not show up on my ticker, though.
Okay, I saw Seagate did have a beat, the big maker of hard drives and computer peripherals as well. Green day yesterday, but a very modest green day. The Dow was up 33, NASDAQ was up by 32, Standard & Poor's up by just under 8. Federal Reserve report coming out at 2 this afternoon. Sounds like it's a waiting game. Add to that the fact that the housing numbers were almost too good to be true. 45 minutes before we open up this morning, Phillip, where are we going?
Hey, we are a little red right now. They've improved a little bit, but the Dow right now is down 0.1%. Same with the S&P 500. NASDAQ's down about 0.15. Everything's kind of that same range. Gold's down 0.1%. Silver and crude oil are kind of the outliers. Silver's down 1%, and crude oil is down 1.5%. Hey, you're going to like this number on crude oil. $58.42 a barrel right now.
I was looking at that and darn near shocked. Boy, that little price spike didn't last very long, did it?
No, and that's what happens when the Saudi Arabians figure out, hey, I can fix it and I'm going to fix it quick because it's costing me money. They're going to have their production online faster than what anybody anticipated.
The second most dangerous place to be is between a Saudi oil baron and his money, I think, right?
Exactly, or his oil field.
Right after between a politician and a microphone. They're about the same danger zones. Overseas markets, by and large, it was an off day at the close in Asia. Nothing really heavy, but all the markets were pretty well off by a bit. Europe's mixed halfway through their day. Phillip, it is a weird time in finances. We get good news that really doesn't get responded to and bad news that becomes good news. It's got to be confusing. How do I get a hold of you to straighten out a retirement plan that'll work for me?
David, give us a call at 382-0037 to schedule their financial x-ray review where we dig deep to find out how much they're paying in fees and cost, because that ultimately affects their return. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And, of course, back here tomorrow morning, same time to see what the Sam Hill goes on with the Fed this afternoon, right?
Absolutely, man. Hopefully we'll have good news.
You have a good day for the rest of it, and we'll catch you then, Phillip. Thank you.
Thanks, Dave.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us. Don't forget that we've got that free report on retirement strategies. All you have to do to get your free report is go to statlerfinancial.net/LM-3 to get your free copy. Do it right now before it's too late. Have a great day. Hope you join us again tomorrow. Thanks again.